And we should be live. Welcome, 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 internet friends. New show from Realms, the home of Solana DAOs, where we create the infrastructure for decentralized projects to manage their treasuries, be fully transparent, make decisions, raise funds, a bunch of things. We're doing this first episode as an intro. The show is going to be called Would You Invest? It's going to be a show about the future of internet capital markets and the rule set that might actually make crypto investable. And today, the line between innovation and speculation is very thin. Billions are raised, communities are formed, dissolved, rebuilt again, and the technology moves really fast, but the trust has fallen behind. So, what we need to do is create real standards, a framework to protect investors, promote transparency, and make decentralized projects behave more like accountable public companies, not casino tokens. That's the idea behind the Internet Capital Market Standard, the ICM standard, a new governance model that treats token launches as structured investments with clear rights, responsibilities, and on-chain safeguards. Uh, I'm joined today by the author and very good friend of mine, Dean Machine, who wrote the paper behind the ICM standard. And let's unpack on how this came to life, what problems it solves, and how it could reshape the way we raise and manage capital online. So let's start a little bit on why we need the standards from your perspective, Dean, and then let's present the standards, and finally, let's start putting popular tokens, projects, crypto companies through this standard and see where they land in the spectrum and how can they improve. So the idea is going to be presenting the standards and then test the projects. So let's hear it from Dean Machine. Again, thank you so much for putting this work, doing this work is very, very important.
Thank you. Yeah, and it's still a work in progress. The paper you have access to, no one else, not many people have access to it. We've only publicly shared what we think the rights are. I'm working on this with some other people, and all of their names will be announced and shared. Everybody will know. Why do we need this? You're one of the few people I know that has been part of this space for close to a decade now. Back in the day, we used to read white papers. We used to really intimately understand these projects. Now there's so many it's impossible. I don't even remember the last time I read a white paper. And I think that just shows how the tools to launch a token and fundraise have gotten so good that now anybody can, go on a pump.fun or Launch Labs, Let's Bonk, DAO Season, all these different places, and just click and then have a token live and get people to give money towards it. So because we've done so well there, we've kind of taken away so much friction, and I think it's time that we have to introduce some education, because all these tokens are not equal, and I think that back in the day with ICOs, with white papers, we knew kind of the difference between these tokens. And that was, people who have been in the space for 10 years, more than 10 years. Now we have more people entering the space saying all these tokens are ubiquitous. They're all the same. They all have no rights and they all have no revenues. That's not true. There's a big difference between so many projects. And I think it's now time to really put in an expectation of what an investment, what a project, what an effort looks like versus, these casino tokens where it's like, I've launched something that's trending today. Are you going to be the guy getting off the seat, the hot potato, the first one to sell on the others? we want to move away from the casino and start to really highlight the projects that are worth our time, our attention, our investment, our usage, our participation.
We've seen projects raise huge sums of money, and we've seen them vanish as well. Good example that we spoke about is Parrot. Parrot raised a huge sum and then voted the whole treasury to themselves. What do you see as the main structural flaw in how crypto fundraising is done today? And what's the problem mostly? Is it trust? Is it lack of rules? Is it lack of investor protection?
Yeah, so I want to focus on the Parrot example where people purchased an instrument that, had they looked into it, they would have seen that the team owns most of the token. And if the team owns most of the token, then they have the most voting rights. So any money you're putting in, they can on their own decide to just give it to themselves, right? They can give themselves the rest of the treasury. So that's just a lack of knowledge. I don't even think a lot of people who purchased Parrot knew that there was a DAO. I don't think they knew there was a DAO. I don't think they understood their rights to vote on it. I don't think they understood the risk associated with this team being able to control so much of the supply. These are things that just they didn't know. It's not that the tools don't exist. It doesn't mean that the enforcement doesn't exist. It means that the knowledge of my participation with this token is not fully understood. And it's the same thing with stocks. Like somebody can buy Apple stock and not realize that they have any voting power, but they do. So, it's an example of how we as an industry need to do a lot more on giving as much of that information upfront as possible. That way, people are purchasing more versions of Apple and less examples of these pink sheet OTC kind of stocks. I don't know what you want to call them, but yeah, it's the same idea: is to help kind of separate the wheat from the chaff, show what is a good opportunity for somebody to consider as an investment, but really understand the risk rewards.
Was there a particular moment or case that made you realize that we need this kind of formal standard?
Yeah, I think that this has been something we've discussed for the last 2 or 3 years. It's really come to the forefront with the concept of ownership tokens. Um, it's a really good word, ownership coins, ownership tokens. And when you start to dig into it, you start to say, okay, what ownership do I get with these kind of coins? Is it misleading? I personally think it is misleading. And instead of us having just this blanket, like, okay, I can call it an ownership coin. Okay, what do you own? What rights do you have? And I think that we need to be fair and have a scoring system that's objective as much as possible. Now that this word has emerged and people really like it, that they can start to understand the difference between, right now it's the launch mechanism that gives them that.
So the problem starts from the launch. This is a proper launch with transparent tokenomics and proper vesting, proper treasuries, and a constitution that accounts for quarterly meetings, change of players and workers and team members, allows for initiative. So before we go into all these little segments within the ICM standard, let's explain a little bit for someone hearing it about this the first time. What exactly is the ICM standard in plain language?
Yeah, so what it would be, right? And this is something that's still being worked on, and I hope that a lot of different protocols are going to be involved in it. I would tell you that I expect Metaplex to be a very big proponent in this, along with Realms. And there's some other names that come to mind, but that remains to be seen. The idea is that you will be able to see at a glance at a token what rights you have with it. You'll be able to quickly understand is this a meme token or is this a project? Is something that has a future, has a team, is building towards something. And a meme token can comply to the ICM, to the Internet Capital Market Standard. There are different layers, right? And there's 0 to 100, but we should be able to start easily scoring and saying that's a 10, that's a 90, that's a 3. Like that's the goal, is that you'll be able to quickly say what this is and understand your risk reward.
And the core principles of the ICM, if we had to list some of the core principles, in the way I understand it is, because we are advocates of a decentralized organization, the things like trust minimization, transparency, and a separation between sentiment decisions and actual decisions that will affect treasuries, or like, if we had to make some points of what is important in the ICM, which three principles would you pick?
Yeah, so the most important is understanding the trust portion. Knowing, okay, now that I hold this token, how are decisions made? And the absolute gold standard we're going after is that everything's contract dependent, which we're very far from. If you ask some people maybe 5 years ago, they would say we're very close to it. And you start understanding this isn't a technology problem. This is more a social, human problem. We're not used to thinking like that. We still haven't been able to put our incentives aligned to have things fully automated. We'll get there, right? Oracle problems, all those things. So trust minimization is super important. Then the transparency. I need to be able to see things. And, just because good with a lot of work doesn't mean it's transparent, right? Like, you could clean a window or the window's already clean for you, right? Like, there's a lot of, public markets information around how much a stock has been shorted, how much they hold. All of those things, they exist, but you have to do so much research. So I think transparency is also like, how much effort is being done to give me the information? Could I, at a glance, understand how this is governed, what assets there are? So that's transparency. I think that's the second one. And then on the third side, probably understanding the, I want to use the word incentives, but it's not incentives. I want to understand my rights ultimately. And what I mean by the rights is, do I have a right to the treasury by, through liquidation? Do I have some upside in rev share or, a buyback program? Like, what are the things that by holding this outside of the trading of the token, because every single token on earth trades, right? They all, that's not a right. The fact that a token can trade isn't a right. Anybody can do that at any time, and transferability is almost baked into almost most tokens. But you having some sort of claim on the revenue share, the revenue of that project or of the treasury of that project, understanding your rights connected to the assets, it's a bit of transparency, I think, again. But that would be the third one, is understanding what your incentive is, what your.
And this is where your phrase earlier, because you use this phrase to treat token launches as structured investments, not casinos, and these are the three most important distinctions when you have a right to the treasury. This is a very important knowledge for an investor once they are building a portfolio. Someone who's playing in a casino, they don't really care about such points.
And you can incorrectly have an asset. Today, you can have one of these coins and think, I have this right, or I have access to this, and be completely wrong. And that's not like, that's a failure of how much research and how much obfuscation other people are doing. Like, a lot of people have a vested interest to misinform you. There is a vested interest to say, this is an ownership coin. Look at all the rights I've given you. The reason why is because there is a perceived premium on saying that word. Just like there used to be a perceived premium to saying we're a DAO. There used to be a perceived, like there's certain premiums we put towards these words. But it should no longer be, you've rated it and you just call it yourself. It should be, okay, if you are one of these things, that means I can do X, Y, Z. And that should be provable on chain objectively. And that's the idea behind the standard, is to move away from this subjective world of, hey, that's the word that I apply to it, to an objective. Hey, you could see on chain through the smart contracts, through the programs, this is enforceable, this is how it is, this is what's going on.
Before we go to an example and we kind of present what's a perfect score for an ICM for the ICM standard, I want to outline that the standard uses multiple types of governance, from elected councils to pure democracies to prediction-based systems like Sowelian and Futarchy. It introduces these terms like allowance and a veto and a few things that we should kind of explain a little bit. Explain why these things. Why does a treasury have different decision governance types, and which governance type fits on what kind of decision making, what's there for sentiment polling and what's there for binding decisions. I think if we distinguish these two, then we're going to have all the different words and ideas explained for us to move into presenting the ICM standard. And I have a really cool picture as well with the initial graph that we can talk about later on. But let's talk a little bit about the multiple governances and why they're required.
Yeah, so the governances cover a different spectrum of, I would tell you, you have a slider of centralization and decentralization. And the more centralized something is, the less trustless it is. But the benefit of that is that the people who are given that trust, they can execute with less friction, let's say. And then the more decentralized something is, there's going to be more friction on the decision making, but it's more trustless, less susceptible to corruption and seizure. Understanding ahead of time the governance, you understand what the board game looks like, what the rules of that society, of that project are. So, a very popular model that we see is some sort of council on most tokens. And you might not think about it, but virtually every, like 99% of tokens are a monarchy or a council, where it's a group that makes all the decisions. And now you can go a little bit further and say, well, is this group voted on? How often do we decide them? That's where token voting comes in. It is the gold standard of taking democratic processes and bringing them on chain. With token voting, you have the easiest and purest version of sentiment, because the only way to share your sentiment is to be holding the token, versus, let's say, Futarchy, where you show sentiment by trading the token. You don't have to be a token holder. You could just hold USDC and trade and show sentiment. So it's sentiment to a wider group, as opposed to token voting, which is only those people. Same thing with Sowelian. Sowelian looks more like token voting, and it sits in between token voting and Futarchy there. the only people who can make a bet are the people who are holding the token. And by virtue of that bet, you're showing the sentiment decision. Now, the amount of what's it called, skin in the game changes along that as well. The skin in the game you have in token voting, it's mid-tier skin in the game because you're only holding it during the vote. Each time you're making a decision, you're putting the exact same amount of skin, so you're not showing any preference across different voter types, right? Like different proposals. Every time you're voting, you're putting your full weight in it. Whereas Sowellian does better there because you have to choose your battles. You can't put your full stack on every single decision. And if you're wrong, you're going to lose that voting power. So that's the highest level of skin in the game. Then you've got the mid-tier skin in the game, which is token voting. Then you have the weakest skin in the game being, again, Futarchy, where, look, you can come in, make a decision, do a trade. It impacts decision-making, but you can leave. So you don't even have to stick around for the decision. You can come in as a token holder for 2 seconds and then leave. So these are all different systems that, they all have different trade-offs. And understanding those trade-offs are going to be important. I would tell you that on the full decentralized, most decentralized side, you've got things like pure token voting, Futarchy and Sowellian. Those I would say are on the most decentralized, and on the least decentralized, you've got things like councils and multi-sigs. And then the amount of distribution, obviously matters, right? If the token is 90% in the hands of the team, that's much more centralized. Whereas if it's, a pure Futarchy where, there is no multi-sig, there is no team receiving an allowance and all of this, that would be, the highest decentralization along with Sowellian and token.
I've pulled here a kind of crude whiteboard we use in the office to think about these concepts. And this is just an example that we were kind of exploring while talking and thinking about these standards. Let's go through this example a little bit. This is a project raising, let's say, $6 million, and has multiple treasuries, multiple rights, many different parties that are in different levels involved. Some are core teams, some are people that are community that have initiatives, some are investors. Let's explore this graph and let's talk a little bit about the unique concepts like the allowance and the types of governance involved in each treasury. And then we can talk a little bit about the choices a founder has in their disposal when they want to actually adhere to the ICM standard. But yeah, let's explore this graph. So this is a project that raised $6 million. In traditional ICOs, we would see this moved into a multi-sig with maybe 2-3 core members, which are anonymous and not. And this is the best case scenario that is in a multi-sig. Sometimes they are in a bank account.
Hot wallet, yeah,
they're in a hot wallet or in a bank account. So what's different in the ICM standard? So these guys here, this project X, raised $6 million. In the graph here, we see that $200,000 go on one side, while no other money seem to be flowing anywhere else. Let's talk a little bit about the allowance, which in our case, in the example, is 200,000. And then let's explore the rights token holders have? Who moves? Who has rights in the $6 million treasury? Who has rights on the allowance? And what happens when a investor is not satisfied, or a token holder is not satisfied with the project and the roadmap and whatever they've decided to do, and they want out? Can you walk us through
Yeah.
this graph?
Yeah, and there's a few assumptions, like, since that graph, there's a few things missing. So, I'll also ask you a few questions, because you were with me when we did this. Is this organization on Realms?
This organization has to be on Realms. Otherwise, where do you get the full tool set?
Yeah. So
It
let's
has to
say
be.
it's on Realms. Okay. That means it has right to information. Off the bat, everybody has access to see the on-chain assets, the policies, and the discussions. So right to information, yes. Transparency, full, yes. Then we go to the right to participation. It's on Realms. So that means that at the bare minimum, you can make suggestions. And then proposal threshold. Here we haven't put the proposal threshold. I assume it's not very high, maybe 1% of the circulating supply. So people will be able to propose, they'll be able to discuss, they'll be able to measure sentiment. So right to participation, high.
Yes, one moment. Is every treasury available for token holders to propose? Can someone propose to take $6 million from the treasury?
So the answer for this one would be no. What they can propose in this one is where we have that 60K. The idea would be, in this model, there is a budget, and then from that budget, the allowance is going out to the team. But that budget's more than the allowance. This also would fix the issue that the OMFG guy has, where he's trying to get an audit and now he has to go back for money. That's an example of, I'm very poor at budgeting. So I didn't put the money I need for audits into my allowance. I just said, oh, whoops, I didn't think ahead. That's not I thought about it and decided to say, I'm going to ask the community later. That was I didn't think about it. And now and they also recently did an allowance increase. So it's like, now I have to tell everybody, I didn't think about it again. You know what? I'll just go and ask the Futarchy market. Anyway, here you would have the foresight of saying, I'm going to need a budget. And it's not only me that needs a budget. The community deserves, in my view, to be part of it. Like, you're going to start to unlock more participation by having that. So yes, the community can vote on that 60K. Now, one distinction to make, it doesn't need to be token voting on that 60K. It could be Sowellian, it could be Futarchy, whatever. It's a decision engine. Unlocking that 60K, you need a decision engine. And that decision engine can be token voting, it can be Futarchy, it can be Sowellian. The part that sets the budget, in this model that you had before, we're delegating that to a council that's elected. The other decision engine is using either Sowellian or Futarchy or token voting. The whole thing is trustless, because from inception, that 6 million is an investing contract. One of the core philosophies should be, does the team need access? Does anyone need access to the entire treasury at any given moment? And the answer usually should be no. There's, Berkshire Hathaway right now is sitting on almost 400 billion in cash. They should not have access to all 400 billion like that. We should, as stockholders, be able to say, look, you guys do some cool deals. Maybe you need 50 billion at any given time, but 100 billion, 400 billion, that's ridiculous. Let's make sure our war chest can't just evaporate in a second. What you got here?
So this is the next level, a slightly more generalized model, that kind of shows the hybrid governance models, where you'll see the allowance, which includes the audits, as per your example earlier. So this sure, mistakes happen. This should be updatable. Uh, so let's assume that the team that is managing the project made the mistake and asked for a smaller allowance than they should have. Now they need to factor in the audits. How should they approach that? How should they propose for an increased allowance? And who has the right to say yes or no?
Okay, we're going to say under this model, not the Futarchy OMFG guys, right? We're talking about
Yes,
this.
we're going to
not
do
that.
it through this model.
Yeah. So in this model, what would happen is the team would propose to stop the vesting. That way it can update the vesting. So there would have to be two separate proposals. That gives a chance for the community to stop either of them. So, hey, guys, we're going to need to, we think we need to adjust the budget for these reasons. Here's a proposal for us to do it. If the community disagrees, they could say, nope, we like the budget just as it is. You're vetoed. Or the community could say, hey, we won't stop you. Go on to the next part. Okay, now this is where the risk comes in. Are they going to try to steal the treasury? You'll see in their second proposal, okay, now they're proposing a higher budget, or hey, now they're trying to take the money. Again, the community has a chance to veto. Oh, we see you're doing what you said. Here's the new budget, approved. Instead of, oh, I see you're trying to take the money, veto. If they were trying to take the money, veto, the money can't move anywhere. The people have it. And then the best version of this is, because the money is now sitting outside of the vesting contract, you should allow token holders to liquidate. It's no longer in the vesting contract. We're no longer doing business as usual. The money's out. If the money's out and you guys have been doing silly shit, let's pull it out. And that can either be solo, right? Just one person can say, hey, I don't trust them anymore. It doesn't have to be, I don't like the idea that the only way I can exit is if we all agree. I should be able to exit on my own. That's my personal preference.
So the idea is, the idea is that if the treasury has $100,000 and you hold as an investor 1% of the token, and you are not satisfied, let's assume that the team quadrupled their monthly allowance without and you don't agree with the rate of spending, and you want out. The treasury has $100,000. You hold 1% of the tokens. How do we imagine that? We imagine that burning your token, sending the token to the treasury and taking a small hit, let's say 15% hit, and then you take out, let's say, $850 instead of 1,000. 1% of 100,000 is 1,000 minus another 15% if you take a hit, 850. Do you burn the tokens or you send them back to the treasury?
I believe you burn them. You could send them back to the treasury. I don't love it. I much prefer the burning, for multiple reasons, right? Because then you don't have this weird thing where you've got more tokens that could be redeemed for the treasury again. I could see a model where you don't want to burn the tokens. A lot of new literature is coming out to support keeping Token Mint open. This is another way where you wouldn't have to keep Token Mint open. You could get new tokens like this, but I'm not thoroughly convinced on Token Mint being open either.
The community veto in the decision making of the total raise, of the total basket, is a token voting, right? This is something that users should be voting with their tokens. One token, one vote. Correct?
Correct.
And what's the idea behind it? Why not Futarchy? At the moment, in the raises of MetaDAO, we see these kind of decisions kind of decided through Futarchy.
Yeah.
Why
So
token voting is a better way or a more fair way when it comes to these veto votes?
right, I see what you're saying. I really don't think the skin in the game um is strong enough. Futarchy. I um I think on token voting, you're holding the token. You by casting your vote, you're still holding on to it. You have a higher level of skin in the game there. Now, I think it's also important to have some sort of deterministic outcome where the community knows it has the power to stop versus I think we will be able to stop if it gets there. And, not this hand wavy, but the market decides, I don't think anybody out there really believes that the market decides because every time, shit hits the fan, there's always this, oh, well, this market's smarter than that market. These people know better than that. And that's where you see that so far, most futards don't believe that the market decides.
Which part of the treasury is handled by market-based governance, or you think should be governed by market-based governances?
Yeah,
And
I think the allowance part, that's really interesting. And that's where you could start to really build a reputation engine, especially if you're using Sowellia. Because there has to be a KPI. We vote on those KPIs. That's where token voting kind of almost always has to be part of things. Even the author of Futarchy, Robin Hanson, also says you vote on values. For whatever reason, MetaDAO took a shortcut and got rid of things like quorum and got rid of things like voting. But even the author of Futarchy agrees that we need to be voting on it. So the idea is you would vote, and then you would start to build a reputation from what are the bets you're making using Sowellia. I bet that if we do this, we're going to get that KPI. Okay, let's see what happens. And if you were right, great. You have more governance power to vote on the values that helped. You bet on the belief and you were right. You probably are a better recipient of voting on those values. And then we have a record of that for when we vote on elections. Wow, this guy batting 10 out of 10 on betting on beliefs. I vote for that person. I want that person to be, making more of the decisions that I'm not part of, the allowance usage. Because look, so far when they're betting on their beliefs, they're right. You can only get that with Sowellian. So far, my top model would be an elected council using token voting, and then there's a budget that's managed with Sowellian.
an election council using token voting, meaning that these guys will be elected to run the project by the
So
token holders.
the token voting is on voting on our values.
But I'm talking about you specifically said elected council.
So there's an elected council. This council is basically the team. They're receiving the allowance. They're the ones that initiate the adjustment of a budget. They're the ones that initiate, some of these higher level things. They're likely the ones that are updating the program. Like most of the decentralized entities we're talking about have some sort of open source code, right? Some sort of asset that's a program. Not everybody should be voting on. Like Metaplex has a proposal right now for Lint validator UMI plugin. I'm just, that's word salad for me. For somebody else, that means something. I have the ability to vote on it. I'm a disciplined enough voter to know I should not vote on things that I really don't know. I would love to know who I should delegate my vote to. Like, I would like to talk to some other people and just say, hey, help me understand how you see this vote. So I believe in sector experts, and that's why the elected council would be there. How we would elect them, that's still up in the air. Could be Sowelian. Like, what do you think? Can elections only happen with token voting?
Let me do an in-between question. Do you think that token holders should have a way to stop the team that started everything, the team that has put the work?
Yes.
So let's say you are running Realms, and suddenly with the Realms token doesn't exist, at least yet, but suddenly people propose we get rid of Din Machine and we want Ronald McDonald,
Yep.
head of Realms.
Yep.
And we've seen internet trolls go ham if it's funny enough. Boatface is gonna be your the name of your vessel. Do you think this power should be on the token holders? And do you think that every decentralized organization should have in their constitution such a such a such a power articulated?
Yes. I ultimately, these are people who have put their money into, ownership. They have a vested interest in seeing things guided and navigated correctly. If they think that I'm doing a poor job, vote me out. I probably also have a vested interest too. So I would say, okay, I'm looking at this. I also hold token. All these guys think I'm doing it wrong. Obviously, now
Uh,
I have a.
I'm trying to understand if this should be a token or a market based governance. I
Yeah,
can see both ways.
I can see both ways too. And that's going to be exciting to explore. Like, you can have elections with skin in the game, and you can have elections just using the token vote. You can't have elections with futarchy because, again, the worst way to make decisions is if the people who make them pay no price for being wrong, and that's why the futarchy model doesn't work. You cannot have a market trade to decide who's going to lead things because they're going to choose Ronald McDonald, and then later when we say, was this the right decision, guess what you get to say? The market decided, but we're all broke. It was meant to be. The market decided.
I'm pretty sure that if we had a footard here on which I know we're both footards, we both hold meta. We've participated in most the most footarchy decisions out there, like Island DAO, which we're all both part of, has after MetaDAO the most footarchy proposals, 9 footarchy proposals, way before footarchy was popular. So we are both footers. I'm pretty sure that if we had a die-hard, one of the cult members, they would tell you, I'm pretty sure we can see a world where we have 2 conditional markets, one with Dean Machine as CEO and one with Ronald McDonald as CEO. And yeah, that's how elections would happen. I'm pretty sure they would. I wish we had some die-hard footer. I think we should get a die-hard footer for the next episode to actually hear the takes on why footarchy fits or is the ICM standard and
Yeah,
token voting, because I know that is like token voting is a curse.
yeah. No,
Uh,
look, futarchy can fit into an ICM standard, 100%.
I
Like, when we
agree.
go through those things, it's like, okay, does the platform of the futarchy allow me, the token holder, to see the assets? Yes. Okay. It has nothing to do with futarchy, right? It's the futarchy. Like, if we look at the proposed rights, there are 6 rights. Let me see if I can get them. The right to information, the right to participation, voting rights, economic benefits, exit liquidation rights, and protections. Now, all of these can exist in the futarchy. The futarchy part is on the voting rights, is the outcome of the decision going to be enforced? The thing is, you as a token holder in Futarkey don't have any special right to vote or any special right to participate. Anybody on earth can participate and vote. That's the important distinction to make, right? So where's that trade-off? Now that I've opened up my participation in voting to the entire world, I'm obviously getting more people. What is the trade-off there? And that's where I would love to have the a Futarkey friend, a Futard friend, tell us what the trade-off is. That when you gain the entire world in participation and rights, what do you lose?
I think we can easily make this happen. I totally agree that Futarkey is part of the ICM standard, can be part of the ICM standard, but cannot replace the ICM standard. The ICM standard needs token voting, needs the ability to veto, needs some higher instructions and capabilities when it comes to DAO tooling. And I'm a huge proponent of token voting. I know the trend is to kind of dislike token voting and to pretend that token voting is the worst. At the same time, token voting is the most tested, has the Lindy effect of thousands of years. We cannot dismiss it so easily, and we need to be very cautious on these new types of governance, like Showalien, like Futarkey, like all these things are experimental and
Yeah, and it's just like anything, when we say which government system is doing better, people vote with their feet. That's why democracy is done so well. Most people are choosing to go to democracies by moving there. Look at money protected by decision making. Most of that money is in token voting or in a multisig. It's not a market-based governance. That's the ultimate, decider of winning. How much capital is protected by these processes?
I think that today we did a beautiful job on introducing the internet capital standard and its internet capital market standard, and we touched on a few aspects of it. We
Yeah.
understood where all the different governance types fit in. We understood the importance of these distinguished treasuries that founders cannot have access to the whole to the whole amount of their treasury, the raise, the money, however you want to call it. The importance of market-based governance when it comes to participation and initiatives. And we also understood the importance of veto, the importance of council. And for most of the viewers, these are kind of foreign concepts. Maybe they haven't realized that all these things are possible on chain via current Solana tooling, or they haven't really connected the dots to on what exactly means investor protection or right to information or the ability to verify instructions and the minimization of trust. So we did a very good job on kind of touching on these points, but we still haven't explored the ICM standard. And the easiest way to explore is to start putting the various projects from the Solana ecosystem to this test and see where they fall on the spectrum. And I think this is how we're going to continue this show. This show is going to consist of a really big bowl, transparent bowl with names of projects, all the favorite ones, all the popular ones, or the ones that had the good, that were considered as good tokenomics, the ones that were considered bad tokenomics, the ones that did well from the beginning, and the ones that launched and failed. We're going to explore all these things. We're going to do it at random. We're going to be putting our hand in a large bowl, taking a little paper, reading the paper, and then exploring their tokenomics, exploring their shareholders protection, exploring their voting procedures, their governance models, their multi-sigs, everything. We're going to be checking how these guys are running their project and how they can improve it. And that's how we're going to refine this idea, how we're going to improve it, and how we're going to modelize it. Because at the moment we're in the exploration mode, and the only way to achieve this goal is to involve more people, involve more founders, involve more more intellectual capital into this effort. For the next episode, I invite the audience, I invite anybody who's on Twitter to tag projects you want us to look at. Do you want us to look at Radium tokenomics? Do you want us to look at Metaplex tokenomics? Do you want us to look at MetaDAO tokenomics? Do you want us to look at your favorite shitcoin that launched through Pump.fun? Everything, every token, every community, every treasury can be looked at through this lens, and it can improve, or it might not be salvageable. It might not be possible to save. But I think it's going to be a really cool adventure, and we're going to come out much smarter with much more information and a model that we can apply and for founders to look at and aspire.
I agree. I'm excited. I think we can look at existing tokens and place it on the spectrum. We can also be part of helping tokens adopt this model and get more input from other founders and other projects and also investors. I think it'll be really exciting to take some of the projects that we're part of, like use this lens to understand how we can do this with Island DAO. Right now, Island DAO, it doesn't have a lot of, it has a lot of these protections, but we're missing some of the scaffolding that comes with it, right? We don't have an allowance. We don't have a budget and a KPI. Like, these are the things that we need to start to put together. And what's exciting is I think these templates and these formats, these standards, help also unlock innovation and unlock the stagnant situation with a lot of these treasuries that there's a lot of money and there's people kind of just going around in circles. What does progress look like? When do we say we're calling it a day? Right? With Island DAO, there has to be a point where we say, okay, what is the KPI? Are we going up and reaching it? Obviously, I think we are. We're doing much better. We're doing more Island DAOs next year. But at the same time, okay, what does the allowance look like? What are the KPI? All of these things, it really helps to use Sowellian to go through this. Some of the best proposals we've ever done. I would tell you, every proposal we've done through Sowellian is the best proposal we've done.
Just to give some pointers, because this is super exciting, and I'm really looking forward to this journey. I just want to show to people that are watching, and maybe it's the first time they hear the word Sowellian governance. It's a very new concept. I am sharing my screen. I am on markets.realms.today. You'll see the proposals. This is Island DAO testing the new governance model, testing Sowellian governance. There are 4 proposals, and I invite people to explore it. This is this is a governance model that any Realms DAO can have access to. This is open source. This is free, not open source. This is permissionless. And you can spin up your own Sowellian governance and try it yourself. Reach out to us if you want to do that. so we can help out. The only way to refine and improve the model is if we test it. So please go ahead and get your hands dirty. Of course, explore realms.today. The V2 user experience is beautiful. It's intuitive. Go look at your favorite DAOs. Understand, connect the dots between all these new concepts that we introduced. Take them through this exercise. See where SNS, where Marinade, where Bonk DAO, where Jito, where are these DAOs? Where do these DAOs fall into this internet capital market standard? And prepare for the next episode. Next Wednesday is Wednesday. It's Thursday. Woo! Next Thursday, then we're gonna go. We're gonna take to the test some of these projects, and we'll also reach out to some Futard friends to maybe join us into this exercise. And I'm pretty sure that the two parts are greater than the sum. So looking forward to our next talk. Super happy we started this. And looking forward to episode 1. This was episode 0. This was the introduction to Internet Capital Market Standard. And intro done. And now we're going to start the fun. So whoever doesn't follow this live, you'll find it within the week in your favorite streaming platforms, favorite podcast destinations. So it's gonna be on Spotify and a bunch more platforms. We're gonna, of course, make sure to share the links through our social media, our Twitter accounts, and if you have any questions, if you have any projects in mind, any ideas, any new governance proposals, join us on the comments. Join us on our various communities. Reach out, and trust me, if it's about governance, we are kind of suckers, and we're gonna get really involved. So big love to everyone. Thank you, Dean Machine. Thank you, Taki Sol, that you are behind the production of this show. Big love to everyone, to the audience, to the governance participants. See you next week. Big love.
Take care, everyone. Thank you for organizing it.